Yeah, I think we're cautiously optimistic on markets. We see pretty strong disinflationary pulse coming through, particularly from traded goods coming out of Asia, bringing headline prices down. Flip side of that is we've got tight labour markets still, and the service sector still seeing some inflationary and cost pressures there. But we're probably at or around a peak in the interest rate cycle, and that's usually supportive at some level for markets going forward. Yeah, I think it's possible. I think we've definitely got a slowdown going on in parts of the economy, and a kind of lag to the impact of monetary policy, and those real rates have gone up, but fewer households in the US and the UK and economies like that have mortgages these days relative to 10 years ago, and also more of those households are on fixed rates, so we've been less interest rate sensitive up until now, but we're beginning to reset, so we will see some of that demand weakening while we've got disinflation happening, and I think that's a sensible scenario that kind of, as long as it doesn't go too far, can lead us to that kind of soft landing outcome. So I don't think markets are too quick. I think they're pricing in what is the most likely scenario today. There can always be outliers to that, but that's probably what's most likely right now. We look for businesses that have an improving return on capital. There's a long history of empirical evidence that shows that if you can, over a 5-year time period, improve your return on capital through enhancing margins and enhancing profitability through the capital expenditures that you make, that's a great way to add value for shareholders over time. So we think in times like this, where we have quite volatile economic conditions, we have a range of possible outcomes in terms of inflation and growth, companies with solid competitive advantages, with great margins and great cash flows that also have strong balance sheets and sensible valuations, give you that kind of all-weather idea that can manage through difficult economic periods. We've recently added Synopsys to the portfolio, and it's really around the arms race in artificial intelligence and in new high-end chip design. The software that Synopsys provide to semiconductor manufacturers and semiconductor design companies is really critical in the development and the advance of either high-powered and high-functioning semiconductors in markets like automotive and in high-end server architectures, and really across a whole range of applications which are expanding as the need for these products expand into new and more interesting areas of the economy.